You were listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 31st of July, 2017. As we look at our charts, we see the S&P 500 down for the day on Friday, but 3 prior weeks of up movement. We see on the Qs also down on Friday, but 3 prior weeks of up movement. We take a look at TLT, the 20-year bond fund, sliding sideways up 0.62% on Friday. And we see gold up on Friday, 0.75% in 3 weeks of up movement on gold. We don't have any weekly vertical crossovers. Let's jump into these charts first with the S&P 500. What do we see going on? Well, the market keeps topping, keeps moving up higher and week after week, but we still don't have a weekly vertical crossover going up. We're still in a confirmed down move, if you can believe it. Why? Because there's not been enough upward momentum to take our price percent oscillator over the top. The derivative oscillator continues to move up, but again, jumping into this market continues to be dangerous for you to try doing. Now let's look at what's going on the 2-day chart. We see on the 2-day chart, it crossed over going up back on the 18th of July and has been going up since really the 10th of July, the 2-day candle on the 10th. The last 2-day candle that we see is a spinning top. The first red spinning top that we've seen in a while since it portended a down move back on the 12th of June. So again, pay attention to that as we go into this next week. Very quickly, the 4-hour chart, what do we see going on there? It has moved down. It has tracked through and closed below the 2-day trend line. And of course, it crossed over going down really in the afternoon on Thursday, the 27th. So again, be aware of that. What do we think is going to occur as we move into this new week? Well, we don't know. Possibly the market's topped out. We'll continue to pay close attention to this 2-day chart and that spinning top, which means indecision, realizing that the 4-hour chart is headed down. So cautionary note on potential down move over the course of the next week. Now we are poised for that. Why? Because we're already in a confirmed down move, long in the tooth on the weekly chart. So if we have a move down on the 2-day chart, a crossover, then look for every reason to potentially jump into that. Okay, so keep that in mind. Move on to the next chart. Going to the Qs, the NASDAQ 100 up for the last 3 weeks, as we said before, just not enough energy to bring it over. And even more important, the derivative oscillator is still in the negative. So continue to keep your eyes open for a topping out and a move down. Also, we have another spinning top, and we see lots of up movement and down movement over the course of this latest 2-day candle. Derivative oscillators losing energy. If you see a crossover going down on the 2-day chart, be ready to take action. Of course, the 4-hour chart is already headed down. Derivative oscillator heating up, lots of down energy, and the price percent oscillator headed down. So again, be poised to take advantage of this market if we have a concerted turnover. That is, the market starts to move down over the course of the next week. Back to the weekly chart, and we're heading to TLT, the 20-year bond fund. It has been sliding sideways now for 2 full weeks. I guess you could go back 3 weeks. That really was where we were tracking down at that point for the week ending the 14th of July. But for the week ending the 21st and the 28th, we've had sideways sliding. We have pretty much a doji over the course of the week. Again, lots of indecisions tending down. Why? Lots of indecision tending down. Why? Derivative oscillators already switched over to the negative. We may see the PPO at the beginning of the week switch over. Just be ready, watching for that. What do we have going on? Well, the 2-day chart has been going down since the 30th. So that's the 30th of June. So again, just continue to watch this market if indeed. Now, again, with the latest down movement, we still haven't hit the bottom that we hit back on the 10th of July at 122.83. It's still around 123.46. So again, we don't have a move yet. We may by the end of the week if we have a weekly vertical crossover going down. Now, for some reason, this market flips over and starts moving up. Be ready to capture that. Why? Because we're now already in a confirmed up move on that weekly chart. If you see that 2-day chart flip over, let's delve in just a little deeper. Check out the 4-hour chart. It is starting to move up. Still don't have a crossover yet on that 4-hour chart. Derivative oscillators losing downward momentum. And do you guys get an idea as to how these waves work? First wave is the little wave. It's the 4-hour. Sometimes it just does its own thing, oscillating back and forth, but if it's a strong enough move, it can pull up the 2-day chart. If the 2-day chart has a strong enough move, it can pull up the weekly chart, okay? And once the weekly and the 2-day are moving in the same direction, either up or down, we wait for that 4-hour chart to back up and then move back in the same direction as the big charts. Folks, that's how we get in. It's that simple. And it typically works that well. And when it doesn't work, you don't trade. Because unlike being on Wall Street, you don't have to trade. You don't have to take risks and lose your money. First rule, don't lose money. Second rule, make money. Okay. Lastly, we're going to go to gold. Take a look at that weekly chart on gold. It has not crossed over going up, seems to be trying to. Derivative oscillator still in the negative, so we'll keep an eye on gold over the course of the next week on that weekly chart. Could, by the end of the week, have a weekly vertical crossover going up. The 2-day chart, we have 6 candles representing 12 days. Again, that's right at 2.5 market weeks. Well, actually, we have a 7th candle. So really, yes, 2.5 weeks of market up movement in gold on that 2-hour chart, 2-day chart continues to move up. Let's take a look at the 4-hour chart. Remember this 4-hour chart, beautiful for those of you who jumped in on that back at about 116 up to 120.71. Very, very beautiful. So again, just be aware, keep watching gold, see how long this sustained up movement will take place. And those of you who jumped in back at 116, I know you're very happy to watch it continuing to go up. But if you happened to jump out when it topped out at 120, good for you. If you jumped out when it topped out or when it started looking like it was bottoming at 119, good for you. If you're still in it, good for you. Remember, the trick is don't lose money. Second trick is make money. And you don't make money until you close your trade. Okay, my friends, thank you so much. We love to hear from you. If you have questions, problems, concerns, let us hear from you. Always feel free to write us, cw@chartingwealth.com. Please make sure to subscribe to our channel on YouTube and, of course, to sign up for our daily market reviews, which always includes this comprehensive review and forecast. You do that at chartingwealth.com. With that comes all of our bonuses. That is the layout at freestockcharts.com and instructions on how to get our layout for freestockcharts.com. In addition to that, you get our How to Read a Stock Chart video, and you get all 3 of our worksheets. The trade worksheet that you fill out when you start practicing trades, which you should be doing all the time when they make themselves available, and we may have some coming up over the course of this next week. You may be tracking one right now, say in gold. In addition to that, you get our daily market worksheet and our weekly market worksheet. Thank you so much, my friends, for being with us. Again, we always love to hear from you. All the best and God bless from the whole team here at chartingwealth.com.